In this video, I'm going to talk about RSI and how to use it properly because a lot of people are actually using it the wrong way. Welcome back to the channel, The Trading Journey. And today we're going to talk about the RSI. This is a tool that is actually an indicator of momentum. A lot of people are using it to know if the market is oversold or overbought, but actually it's working much better when you use it as a momentum to know if the market still has strength or not. Let's get on to the charts. I'll show you how to use it. All right, now we are on the Apple stocks and let's look at these charts with the RSI. I have it already here. As always, if you want to add it to your chart, you go to indicators, type in RSI, and there it is. It's one of the built-in indicators as well. It's very used. It's one of the most popular indicators, so you'll find it easily. There's also many other versions of people who try to kind of improve this, but I think we can just stick with the good old RSI. It's composed of this line, which is an indicator of the movement of the market. This is a momentum indicator, and it can also show whether the market is overbought or oversold. There are two different areas in this indicator. You can see this box around in the middle, which is basically the neutral zone. When the price is there, it means that the market is pretty efficient. There's no excess, nothing is overbought or oversold. And then when it gets out of this box, over the value here, you have values on the side. The value is 70, and for the lower is 30. So when you see the market going above this 70 mark, this means that the market is overbought. People are irrational and they are buying too much. So that means that the market is likely to consolidate or reverse. And here we see that there's this high where we go to 84, and after that there's a pretty significant drop in the market, so that could be an early indication that the market is going to reverse. Now, that being said, it's not enough to just see the RSI being in that zone, and you have to be very cautious of this because a lot of the times the markets stay irrational, and as the great the great Warren Buffett said, the markets can stay irrational much longer than you can stay solvable. So that means that you shouldn't just bet against the market because it's overbought. And we have the example here with this spike above the 70, and it just keeps going up. Another spike here, it's not the reversal yet, so it just keeps going up. And especially if you trade crypto, the market usually stays very long in the overbought area and just keeps going up. So that's something to pay attention to. Now there's also a moving average here. I don't really use it a lot, but this can be also a nice crossover. You can see when the RSI crosses that moving average and is overbought, some people could also use it as a strategy. Based on this signal, it means that the market is at least consolidating. Now there's another thing to see with the RSI. It's called divergences. And whenever the RSI is doing something different than what the price is, it's called a divergence. For example, here we have the market doing kind of higher highs. It's not so clear, but it's still going a little higher on these little spikes. But we see that the RSI, on the other hand, is doing something more looking like a downtrend. And what the divergence is that the momentum of the market is different than the price action. And that could be leading to the market just reversing. It's a sign of exhaustion, basically, of the current trend. So if we're in an uptrend and we see the tops are being different, then that means that this trend is coming to an end, or there will be some sideways market. And if we see it on the other side, on the bottom, then this means that the market can reverse, or that the downtrend is over. For example, here we have still a low that's lower than the previous one, but on the RSI, it's not the case anymore, and this one is getting higher. So what this means is that this trend that we were in, the downtrend, is coming to an end. But once again, not always. And we do have some consolidation, but then the market keeps going down for a bit before that. So divergences are, as the rest of the RSI, a confirmation. And that's the main use I have with RSI to confirm my entries. I see, okay, here, this trend is maybe there's a daily resistance here. I see that this trend has been going on for a long time, and my strategy is telling me that there might be a reversal. If I see on top of that the divergence on the RSI, I would be very inclined to just short here with the stop loss above this little high, and then target the previous low here. So this is very nice to see when to take profit as well, because you can see here when the RSI crosses over and is in the oversold area, then it may indicate that it's a good time to get out of here, because the market will retrace a bit. And that's how you use the RSI. But another thing to mention is that it's mainly a momentum indicator. So what you can also do is to go in the settings and just remove altogether this RSI based EMA and the upper band, middle band, lower band. You just basically just get rid of everything. And now what you have here is just a line of RSI, and I would add another line at the 50 horizontal line. So you just write it around here. You can then just adjust it in the settings to have 50 sharp, but that doesn't matter so much. It's just to show. And now you can see that whenever the market is going up, whenever the RSI is going up and towards that line, it means that the momentum is bullish. And when it crosses that line, it means that there's a chance that it keeps going up. And same for here. As long as the market is up and going towards that line and above this 50 line, it means that the trend is going to be a downtrend. And we have that here. We cross the line and we keep going down. So that's the big downtrend. And you can see like this, it's acting more like an oscillator, a bit similar to the MACD, which I will show in another video. And that's very, very interesting to see that it's accompanying the movements of the market like that. So you can use it to see when your trades are ongoing. You can also check the RSI in that way to see, okay, is there still momentum? And always watch out for those divergences. So that's it for today's video. Don't forget to subscribe to the channel. If you have any comments and questions, you can share them below. I'll make sure to answer, and I'll see you in the next video.